It can be difficult getting approved for a mortgage, so it's important to be fully prepared when you start looking for your new place. There are many things that lenders look at when they decide whether to approve a mortgage application. They want to make sure that you will be able to repay that loan, and they will look at a variety of factors to determine this. In this video, we will share 15 expert tips to help you get approved for a mortgage. First off, I'd like to extend a warm welcome to our frequent viewers and those of you who are new. This is the Beasting Your Fire Journey channel. I am Jordan and love sharing our financial freedom stories with tips and tricks on building long-term wealth. Please leave a like, comment, subscribe today for more awesome content to come. The following tips will increase your chances of getting approved for a mortgage. So let's just dive in, let's get started, let's go. Tip number 1. Make a budget and stick to it. One of the most important things that you can do when trying to get approved for a mortgage is to create a budget and stick to it. This will show the lender that you are a financially responsible person and that you are able to stay disciplined within your budget. You have financial discipline and that behavior that lenders are looking for. It is important to include all of your income and expenses in that budget. This includes debts and bills. Lenders want to see that you can afford your monthly mortgage payments along with all of your other debts that you have at the time. If you can show them that you can live within your means, they will be more likely to approve your mortgage application. Alright, tip number 2, save up for a down payment. Another thing that lenders look at when considering a mortgage application is the amount of money that you have saved up for a down payment. The more money that you can put down on your home, the more likely you are to get approved for that mortgage. Generally, if you cannot put down a 20% down payment, you will need to pay mortgage insurance. The larger the down payment, the lower your monthly payment will be, and the more likely you are to get approved for a mortgage. If you find yourself struggling to get a mortgage, a lower total loan amount can definitely help. Saving up can be a difficult task, especially when there is a hot real estate market, but it is well worth it in the long run, even if it takes longer to save that money. Just be disciplined. Tip number 3, have a good credit score. Your credit score is one of the most important factors that lenders consider when approving loan applications. If you have a good credit score, it will show lenders that you are responsible for your finances. If you have any negative items on your credit report, now is the time to clean them up before applying for a mortgage. This shows lenders that you are taking the steps to improve your finances and are more likely to make your monthly payments on time. To increase your credit score, make sure to pay your bills on time, keep your credit utilization low, and don't apply for too many loans at once. Tip number 4, get pre-approved for a mortgage first. It is a great idea to get pre-approved for one. This means that you've already been through the underwriting process and have been given a conditional approval for the mortgage loan. Having this will give lenders confidence that you are a good risk and increase your chances of getting approved for that mortgage. To get pre-approved for a mortgage, you can either do it through a traditional lender or an online lender. Online lenders are often able to give you a decision a little bit more quickly, but they may not have as many loan options available. So do some research and go shopping and check some different lenders out. Tip number 5, have a solid job history. Lenders also look at your job history when considering a mortgage application. They want to see that you have been employed for 2 years or so, as this shows stability and responsibility. If you have been unemployed or have had a lot of job changes in the recent history, it may be slightly more difficult to get approved for a mortgage. Tip number 6, have a low debt-to-income ratio. This is another thing that lenders look at carefully when considering a mortgage application. It is your debt-to-income ratio. The calculation goes like this. You divide your monthly debts by your monthly income. Pretty simple, but a very important number to understand. Lenders want to see that you can afford to pay off debt payments, along with all the other living expenses going on. If you can show them that you can handle debt effectively, it can raise your chances of being approved for a mortgage. My wife and I worked extremely hard to pay off $56,000 of school loan debt by using the debt snowball method. This helped lower our debt-to-income DTI ratio significantly. Here are some awesome tips for raising your income. Job hunting, asking for a raise, starting a side hustle, investing in assets that produce passive income, And here are some tips for eliminating debt. Create a budget, get rid of unnecessary expenses, refinance high interest debt, and use the debt snowball method or some sort of debt paying off method that works for you and your current situations. A low debt to income ratio is important for mortgage approval. For example, consider the two following scenarios. Person number one has a consistent income of $100,000 per year with zero debt. Person number two has an earnings of $15,000 to $20,000 per year and has $10,000 in debt. These examples may seem a bit exaggerated, but if you were a mortgage lender and only had money to invest in one borrower, which one would you choose to lend? The answer is clearly number one. Tip number 7, save up for closing costs. When applying for a mortgage, you will also need to save up for closing costs. These are the fees and expenses that are associated with getting a mortgage. Closing costs typically range from about 3 to 5% of the total loan amount, so it's important to budget for those. By showing your lender that you are prepared for all of the costs associated with getting a mortgage, you will increase your chances of getting approved for one. Tip number 8, get help from a mortgage broker. If you are still unsure how to get approved for a mortgage, or if you've been denied in the past, it may be helpful to work with a mortgage broker. A mortgage broker will be able to find you the best possible deal on a mortgage and can help navigate the application process. Tip number 9, wait until you are ready. One of the most important things to remember when applying for a mortgage is to wait until you're ready. Don't apply for a mortgage unless you are absolutely sure that you can afford the monthly payments. This will only lead to disappointment and could damage your credit score. Being sure that you can afford the monthly payment will boost your confidence and your credit score. Tip number 10, start building credit ASAP. If you don't have a lot of credit history or do not have a good credit score, it is important to start building credit or fixing it as soon as possible. This will show lenders that you are responsible with money and can be trusted to make monthly payments on time. Tip 11, shop around for the best mortgage options. When applying for a mortgage, it is important to shop around for the best options. This means comparing interest rates, terms, and fees from different lenders. By doing your research, you can find the mortgage that is the best for you. The more mortgage options you have, the better. Tip number 12, find a cosigner. If you're having extreme difficulty getting approved for a mortgage, you may be able to find a cosigner. A cosigner is somebody who agrees to sign the loan with you and is responsible for making the payments if you default on the loan. This could be a family member, friend, or business partner. The cosigner will need to have good credit and a steady income. They need to be aware of the risks involved before agreeing to sign the loan. If you default on the loan, the cosigner will be responsible for that debt and their credit score will be impacted. So it's important to only use a cosigner as a last resort or not at all. Tip number 13, rent to own. This is a type of contract in which you agree to rent a property for a specific period of time, and the option to purchase is at the end of the lease. This can be a helpful way to get approved for a mortgage if you don't meet all of the requirements. Tip number 14, lease options. This is similar to renting to own, but gives you the option to buy the property immediately instead of waiting until the end of the lease. This could be a good option if you are not sure if you want to purchase the property or not. Tip number 15, government-backed loans. If you're having difficulty getting approved for a mortgage, you may want to consider a government-backed loan. These loans are backed by the federal government and have more flexible requirements than traditional mortgages. Government-backed loans include FHA loans, VA loans, and USDA loans. Each of these loan programs have its own eligibility requirements, so be sure to research which one is right for you. You may also want to talk to your local housing authority about government-sponsored mortgage assistance programs. These 15 tips are just a few of the ways that can help you get approved for a mortgage. Be sure to do your research and talk to a lender about which options are available and best for you. And remember, it's always best to start preparing for a mortgage well in advance. By following these tips, you can improve your chances of getting approved for a mortgage. I would like to wish you the very best on your purchasing home journey. Buying real estate can be an amazing fire tool. If you found this video helpful, please leave a like, comment, and subscribe for more tips and tricks. Take care, and we'll see you next time.